Okay. All right.
There you go. Problem solved.
Is it? Okay.
Yeah.
All right. So, little technical error. Sorry, guys. I was a little bit late.
Yeah.
But technology is great until it's not. So, I'm Kristen Brockman. I am a DFW realtor, and I'm here with Will Smith.
Hi, my name is Will Smith. I'm a senior analyst here at the Phoenix Group.
And we just want to talk to you about credit repair and what that means, because I have a lot of clients who come to me and they're wanting to purchase a home, but they're not in a position to do that yet. And sometimes they just don't know what they don't know. Uh-huh. And so I get a lot of questions about credit repair and what that means and what it looks like and what to do and what not to do with their credit. And so if your goal is to buy a home, or maybe just to have better credit, better buying power, then you'll want to listen to what we have to say. More specifically, this guy. I'll refer you to him. So, Will, tell me a little bit about credit repair and what my clients or your clients can expect.
Sure, absolutely. I mean, the reality is that people go through life issues all the time. Most people don't wake up one day and just say, I'm not going to pay my bills on time. So you get sick, you have a divorce, you lose a job. So there's different things that come into play when it comes to credit. And everybody has different credit. Everybody has different issues and needs and goals. So one of the things that we do here at Phoenix is we're an auditing firm that works in conjunction with a law firm. And there are multiple laws out there. Like you mentioned, there's a lot of things out there that are supposed to protect consumers. It's just to enforce it. Because when you're dealing with the bureaus, you're dealing with creditors, you're dealing with collection agencies, these are all private institutions. They are billion-dollar corporations. So getting them to enforce and obey the rules can be a very difficult thing. So as far as our step-by-step process goes, when somebody, especially like referred by you or one of my other referral partners, or if they find us online, we start with a very detailed, thorough analysis and assessment and a consultation. All those things are completely free. Being that it depends on certain factors like what types of accounts are harming your score. How does it factor into your score? There's different percentage points and utilization factors. All things that either A, they don't need our help, or B, we can't help with. So if that's the case, we're going to give as much advice as we possibly can. Reason being is that with what we do, we enforce those laws. We make those companies, when we investigate them, show proof of what they're reporting. Paperwork, contracts, documents, billing history. By law, they have to provide those things, and if they can't, then you legally cannot report that information. Not that things didn't take place, but they're no longer allowed as the data furnisher to report it to the bureaus. So that's what we do, because bottom line is getting people back to better credit. If they need our help, and if we can help them, great. If not, if they just need advice, that's what we do. We educate people about how to use their credit and to be a worthy consumer.
Love that. So what I love about why I refer so many clients to Will is because, like he said, he's an educator. He will educate you. And if you're not a right fit for his program, he'll tell you that. He's not going to try to sell you on something that is just not going to work in your benefit. And he's extremely knowledgeable. And so I always learn something when I talk to him about credit. So he will educate you on your situation and kind of what to do, what not to do, and how to help you out.
Yeah, I mean, there's a wide range of issues and scopes and things like that. I get to work with amazing people like Kristen, because if there's not them, then I don't have a business. We are not successful if they're not successful. And so we have people that come to us and say they've got the worst credit ever, which very rarely is somebody actually got the worst credit ever, or they think they have okay credit, and reality is they don't. They're not aware of their situation. We have people that actually do have really good credit, but they're still trying to get to the next level, to tier 1 exceptional credit for different goals and different reasons. So everything's on a case-by-case basis as far as how we get them back to you, or we get our clients to their goals to be a worthy consumer.
So you bring up a good point. I have a lot of customers or clients who are like, well, my credit is really bad right now, but they're just looking at what Credit Karma is saying. So I always encourage them to speak with either a loan officer or Will to really see what their credit is. And maybe it's not as bad as you think, or maybe it's just a simple fix that can boost your score. I say quickly, that's a relative statement, but it might be something simple. So you never know until you just reach out. But If you get into that, well, my credit sucks and I'm not going to be able to buy a house. Well, let's talk about it.
Sure, absolutely. There are multiple scenarios, and I can give you some examples. First and foremost, anybody that's using Credit Karma to monitor your credit, stop. Not that it's a free site, and I love free things. If somebody wants to give me free stuff, it's not an accurate tool. There are lots of other consumer sites that you can pull your credit from, that you can monitor your credit, that don't hurt your score, that you can actually get legitimate, actual good content. Experian.com, myfico.com. There's lots of places out there that you can look at it. It's not going to be 100% accurate because it's not a lending report, but you have options. But very simple situations. I had a client or potential client that was referred to me from a mortgage officer in North Carolina, and they had a late pay on their report from about 30 days ago, which damaged their score pretty severely. Now, is that late pay going away from 30 days ago? Most likely not. There wasn't really going to be anything that we could do to help improve it. However, looking at what we're called reporting codes or risk factors and previous payment history, we were able to advise her as far as some open cards, getting the balances down. And she'd previously been an authorized user on a family member's credit card that had amazing payment history. And so by advising them to get put back on as an authorized user, they didn't gain back everything they lost, but they gained back about 90% of what they lost within about a 30-day period. And they could apply for their home loan and actually get through underwriting and buy the house. Wow. So very simple situations that they didn't need our help because we couldn't help them, but they just needed some directive on how to help improve some things on their own.
That's awesome. Yeah. That's a great story.
Yeah.
So what I hear and see a lot also from a client, I keep saying customer, a client recently approached me. He's in a debt consolidation program. And so he wants to buy a house, but unfortunately we have to look at rentals right now because his credit is shot.
Yeah.
So tell me a little bit about, I guess, debt consolidation programs, why you shouldn't use them and why you should use you instead.
As far as the options go when it comes to credit, there are some rare circumstances where debt consolidation might be a good option. Same thing with the bankruptcy. A lot of people just think that if you go into bankruptcy and you can wipe out debt. Same thing with debt consolidation, that you're going to save money on that consolidation. And there are some myths about why they actually will help benefit you when it comes to credit. First and foremost, you're paying another company to pool up funds, and you have to let all of those accounts go into a charge-off or sold to collection status, which means they're as damaged as they can possibly be on your credit report. So first of all, they have to be as bad as they can get. Then the company will go in and start negotiating settlements for you, when the reality is if you don't mind having those conversations with those companies, if that's the goal, you can do that yourself. You can negotiate the same settlements without paying additional funds to another company, a third party. Problem being is that it does definitely help remove debt if you so choose that. Your debt to income ratio can be improved, but your credit is going to be crushed. Because while debt is a factor on your credit report, the number one factor is payment history. Payment history is 35%. And now you've got all these derogatory accounts, so they're charged off, they're in collections, they're paid, they've got a $0 balance, but they're still damaging your score severely. And so you come out of it with horrible credit. And it's now the situation is, what do I do to improve my credit? One other thing a lot of people aren't aware of when it comes to debt consolidation. By law, if you save over $600 on an account, they can consider that earned income. So the very next year, all of a sudden you get 1099s in the mail from all these companies because you saved money, which you still will probably save money, but not anywhere as much as you thought you did, because now you have to pay taxes on it.
Uncle Sam always finds a way to put his hand in your pocket.
Yep. I always tell folks when it comes to specific things like student loans in default, tax liens, different things like that, Uncle Sam is going to get his money. And so there are some situations where paying derogatory accounts is a necessary benefit that may not always be to the benefit of your credit, but being proactive on certain things that are federal will benefit you from them coming after you in other ways that you don't want them to, like wage garnishment, liens on properties, garnishing your taxes. There are other things that they will do if you just choose to try to ignore those types of debts.
Awesome. So my clients, what I try to tell them is, when you have the best credit score, you have the best interest rate and loan package. and also pay. Well, okay, let me put it this way. When I speak to my loan officers, I ask them, like, what's the number one advice you'd give to a client? They're like, pay the damn credit card.
Right? Yeah.
So what comes up a lot, and this has been coming up a lot recently, are these buy now, pay later programs. And so I think clients think, well, it's not a credit card,
Right.
so I'm good. But I don't think they realize that it affects their credit and their debt to income ratio, which then will affect your purchasing power and your interest rate. So tell me a little bit about these buy now, pay later programs. There's several out there. Affirm is one.
Klarna is one.
Klarna.
I think that's how it's pronounced. Yeah. Yeah.
I know it starts with a K. And I think there's another big one. I think there's 3 big ones, but these buy now, pay later, I've heard BNPL programs. So it's just the acronym. Everybody loves acronyms. So.
Yeah. So when it comes to something to that effect, obviously when it comes to debt to income ratio, that's a great question to have with your lender, because they take in all of your normal monthly payments and it factors into your income about what your percentages and levels are. So even if it's only $50, it's $100. Well, that now goes into your monthly debt and it factors your ratios that actually will qualify you for certain loan amounts. When it comes to your credit, what a lot of people aren't aware of is that it'll show up as an installment loan on your credit report. Installment loans typically right off the bat automatically drop your score. Reason being is that there's high risk because your credit score is basically a reason for a lender not to lend to you. And so things that consider high risk, like negatives or open accounts, are considered high risk because you don't have any payment history yet. So it doesn't matter if it's $50. It doesn't matter if it's $100. I've seen $30 Affirm accounts that drop somebody's score 10 to 15 points because it's 100% debt on that account and you have no payment history. So they don't know if you're actually good for it yet. Therefore, you pay it. And another thing with those is because they are very short term typically, payment history being a big issue, you can't build up any payment history on an Affirm account or a buy now, pay later account. So it's very short term. A lot of those, I want to call them payday loan places, but a lot of the short term that have high interest rate things, when they claim it's building your credit, at the very best, it's not doing anything because you have an initial dip, and then by the payments that you do actually make to remove the debt, it basically mitigates and gets you right back to where you were to begin with. So there are a lot of other great options if you're looking to work on building credit. Unfortunately, those small loans like that actually will typically be a detriment to your credit score.
Absolutely. I want to touch on what you said about building credit, because that's another thing. I have a lot of clients who come to me. They're young. They don't have any credit history whatsoever. So then therefore they have a bad credit score.
Right.
And so that's going to be hard to find both a rental or a home to buy.
Right.
So how can these young consumers start building credit wisely?
Yeah, that's a great question, because there are lots of myths out there. There's lots of things that people will advise on that, again, don't help your credit. You have to have a healthy mix of revolving and installment credit. Typically, the easiest, most effective way to start at the beginning is revolving, which would be credit cards. It's not about spending a lot of money, but you're having to show that you are responsible with open accounts. So sometimes if you're just starting off, a secured card is a great option. If having a family member or a friend that is willing to put you on as an authorized user, your credit does not affect theirs. But what happens is all of their payment history on that account is now added to your report. So you're getting years of payment history, hopefully, as long as they are responsible with that account, keeping balances down. That can be a huge benefit to you. Getting a mix of typically starting with revolving and then possibly moving into a small installment loan, like a personal CD loan with your bank. Again, that's helping to build credit by typically putting the debt back into it pretty quickly and then making normal monthly payments towards it. A great example, I have 2 sons. One's 22 and one's 19. With both of them, when they were about 16 or so, we put them on as authorized users to our cards. So they were building up all that payment history so that by the time they got out of high school, they have great credit and they can go use it for certain things. Now, mom and dad still make sure that they use it wisely. They're not out there just going ham sandwich on it. But it's a way to help people build, especially young people that have no credit, is starting with something small and showing small payment history. You're wanting them to show that you are using it wisely, but you're not maxing it out. I've heard a lot of theories say, well, go max the card out and then go pay it off at the end of the month. That does you no good. Reason being is that they don't report your balance on the same day that the bill is due. Every company has a reporting or statement date, and a lot of times it's different than your billing date. So you may pay it off at the end of the month, but sometime in the middle of the month, that's when they reported your balance. And if it was maxed out, they consider you high risk. So even though you're paying it on time, it will hurt your score. Mm-hmm. So there are various things like that. Knowing when your account is reported, making sure the balance is low, making sure you have a good, healthy mix. Normally, things like that, if you're just looking to build credit, within 30, 60, 90 days, you can find yourself in a good score, and then from there, just continue to build to an excellent score.
Mm-hmm. So you made some good points that I want to touch on. When I go shopping, I don't shop a lot because I'm cheap and I don't like stores. But when I go shopping, I always get asked, do you want to sign up for a credit card?
Yeah.
So you talked about revolving credit and for these young people to get a credit card to start building credit. So is there a best credit? What's the best credit card that they can get to help boost their score, right? Because I mean, you go into TJ Maxx or Kohl's or whatever store, and they'll try to you get 20% off, right? And so, what are your thoughts?
So when it comes to department store cards, there's a couple of things to be aware of, because obviously, they're offering that to you with the incentive that you're going to save some money. For them, it's a commission sale. So just like with anything else that they're selling, if they sell you an account to apply for, they get paid on it as well, which there's nothing wrong with that. But most of the time when it comes to department store cards, you actually have to have a pretty decent credit score to qualify. For most of them, I think they are typically around 680 or higher. And if you don't have that score, well, then basically you're causing an inquiry that's going to drop your score a couple of points because you don't qualify either way. And on a lot of those cards, the interest rates can be pretty high as well. So if the goal is to get an open card, normally department store cards are not the way to go. Whenever my wife and I are shopping, when they ask you, she immediately just points to me and I say no, because when it comes to like inquiries or shortening the age of your accounts, because if I have a 10-year age history, because age improves it and builds it, if I open up a brand new card, it shortens my age from like 10 years to 6-7 years, which that also hurts my score. So I'm very specific about that. Great things for people to look at if they're wanting to work on building revolving credit. First of all, depending on who you bank with, you can always walk into a bank and ask them, okay, well, what kind of starter cards do you offer? What are your requirements? Do I need to put a security deposit on it? There's some great institutions out there like Capital One, Discover. They're out there that do offer starter cards. Even American Express offers a starter card. Everybody wants to get to the Black Amex, but you got to start somewhere. And so they do offer those things because with all these companies, bottom line is they want your money. They want your business. And it's just being responsible with them and showing them that you are a good consumer, because then credit lines will increase. And it's not like you still need to go out there and spend a ton of money, but now you have a lot of security and protection if you've got bigger trade lines. There are always the accounts as far as having good credit with cash back, points, mileage, to where those things can actually work for you versus against you. So you can actually use credit and you can have some debt on your report that actually benefits you. And so that's always an important thing that I share with my clients.
Don't get crazy though with that debt.
Oh no. No. So typically if somebody asks me, hey, should I put this on credit? The answer is well, are you willing to lose some score? Because it then is how quickly can you pay it back off? We're in an immediate gratification society. So we all want things right now. And sometimes that means you have to have good credit. You have to be a little more disciplined. And if you can be financially aggressive in paying certain things off, then that's fine. For emergency purposes, things like that, where you go to the hospital and they say, hey, you know what, insurance is going to cover this, but your deductible's $5,000. Well, a lot of people have a problem with having $5,000 in the bank account. So that might be a great tool of why you need a credit card, is so that you can cover emergencies like that. But the goal is always to show that, hey, I am a good consumer. I'm responsible with it. So I'm not out there just buying everything. Because number one, you don't typically need those things. But two, you're also not basically being a risk with your score.
So one thing you talked about is the age of your credit.
Mhm.
And so I hear a lot with my clients like, oh, good, I just want to pay this credit card off and then I'll close it and then my credit will be better and I can buy a house. And I tell them that's not the way it works.
Right.
So talk.
Yeah. So when it comes to any type of account, whether it be an auto loan, a personal loan, a credit card, once it is closed, it is no longer active and your payment history no longer reflects into your score. Lenders can look and see if you have specific accounts that you were indeed good with them, that you were responsible, but it doesn't reflect into your score. I have multiple people that will reach out to me, call me, email me saying, hey, I've got an extra 5-10 grand. I'm going to pay off my truck or pay off my car because I know it's going to help my credit. The answer is maybe not, because it does help, again, eliminate debt, which does factor into the score, but payment history often outweighs that. So it depends on the utilization. If it's okay, well, if you're paying off, is it at a high utilization? Or if you have just a couple of $1,000s, maybe it actually is a better idea to just continue to make your payments on it. Interest plays a factor. So if you can save a ton of money by eliminating a lot of interest, then you have to make that decision for yourself, which is more important, saving interest or not seeing your scores drop a little bit. Also, because the goal is to have a healthy mix of both revolving and installment, so that way when a loan ends, it doesn't hurt your score. But when it comes to paying off credit cards and then closing them, typically that's a horrible idea of helping credit. A gentleman I spoke to yesterday said he did not want to pay the $75 annual fee on a card that he's had for about 6 years. And the answer to him was, or question to him was, are you willing for your score to drop 20, 25 points because you lose 6 years of payment history? Is it worth $75? That's up for him to decide. But those are some things that people aren't aware of that can actually hurt your score when you think you're actually helping it.
Yeah. Awesome. Let me see something.
Okay.
I know we're live, but I wanted to see if there were any comments. Okay, no comments. What else?
I think one of the important things for somebody that has credit issues, if they're looking about what really can be done to improve their credit, is that there are some red flags. There are some things to be aware of. Is that, hey, is this company really going to benefit me, or do they have my actual best interest at heart? So there are a few things I tell people when they're trying to find the company that works for them. There are thousands of credit repair companies out there. There are some companies that are actually very good at what they do. Unfortunately, there are some that are just flat out scam artists, or there are some that just really don't provide the results that they used to or they hope to. And so a couple of things I tell folks is, number one, is if they can guarantee you 100% deletion, that is a lie. Nobody can guarantee 100% deletion. What they can hope for is 100% deletion, and it does happen. But the reality is that, these things did take place, and there are companies that do their job. And so it can be very difficult to see 100% deletion because of the factors that, life issues happen and you had a bad account. If they can guarantee a specific score, one of the things I always tell my clients is that, hey, if you do what I ask you to do and we do our part, I know that you'll be back to a worthy consumer. What does that mean? Does that mean you're going to be at a 660? Does that mean you're going to be at an 800? All those things are different variables and different factors. Nobody can guarantee you a specific score. There was a company that would guarantee a 700 score, and they'd have a little asterisk down at the bottom of their billboard. I think the asterisk was that they guarantee 700 if you're at a 699. That's really the only way. Also, if they can tell you what it costs for them to work on your credit without even looking at your report, you are guaranteed that they're sending out the same generic dispute letter, which is a very outdated method to attack these things on your report. Because how do they even know what's on your report? How do they even know what's damaging your score? How do they know what companies? Because some companies fight differently than others. So if they don't even really know what you're dealing with, how can they provide you with a solution? Mm-hmm. If you go to a doctor and say, hey, doctor, I'm really sick, and they just say, hey, take this pill, well, that's a quack because they haven't actually examined you. So what we do is we do provide a free analysis, assessment, consultation, and we lay out an entire action plan, whether it may be things that they can do for themselves. There may be multiple different options that they have as far as how to improve their credit, and all those typically have pros and cons that they have to decide what's the best route for them. If it's a company that states that there's no end to their program, you can ask them, hey, when's the program end as far as credit repair goes? If they tell you it's whenever you're satisfied, it's a subscription service. You're basically paying for something like you would Netflix or Hulu, because their goal is, it may not be a huge monthly amount, but as long as you keep paying them every 30 to 45 days, they're going to keep regurgitating the same things. Yeah. And so before you know it, you may have been in the program for 12 months, 18 months. I had a gentleman I worked with that he'd worked with a credit repair company for 3 years.
Wow.
He was only paying them, it said it's only like $80 a month, but when it all comes down to it, that's almost $3,000 that he spent, and his scores went up about 25, 30 points. So it's important things like that making sure that the company has your best interest at heart, that they know what your goals are, your time frames are, and looking at the report to confirm what can be done and providing you solutions to get to that place.
Wow, 3 years. That's crazy.
Yeah.
That must have been a hard sell.
Well, yes, because obviously people do get jaded. They get burned.
Absolutely.
I tell people, in reality, a lot of the companies that are in our industry are just scam artists.
Yeah.
And so when people get burned or they've had a bad experience, it is difficult to overcome those expectations. It's kind of like if I go to a restaurant and I have a horrible meal there, then it's really likely that I'm not going back to that same restaurant. But if I go to one that's in the same genre, expecting that hopefully I would have better results and I would enjoy the dinner and the meal is great and the customer service is awesome, the environment is awesome. Sometimes it's hard to break that stigma. So what we try to do is we ask a lot of questions at the very beginning. We want to make sure that we understand what is taking place, what has happened, what have they been doing, what is open right now, and how do they address those things, making sure that they're able to keep open accounts paid on time. Does anybody no good? I have somebody who was referred to me by one of my lenders last week. They want to buy a house. Unfortunately, they can't keep their auto loan on time and they can't keep their credit card on time. It doesn't matter what anybody does to improve their credit. Until they can financially take care of those things on a consistent basis, their credit is not going to be fixed.
Right.
So they're not actually a home buyer at the time or potential buyer. Their issue is finances first, not credit.
Right.
Yeah.
Right. And sometimes it is like a budgeting issue and how to better spend your funds or save your funds. God, what was I going to say? There was something.
Well, one of the things that people don't recognize for themselves is that they know that at the end of the day, at the end of the month, after they pay their bills and stuff, they should have money left over. But they don't. And so one of the most important things is to find out, okay, well, do you really know where your money's going?
No.
And a lot of people don't.
No.
Because, hey, I got some money here. I want to go see a movie. I want to go out to eat. I'm going to go do some shopping. Amazon, watch out. So a lot of people love Amazon, but you can spend a lot of stuff on there without really paying attention to what all you spend. So it's important that obviously, even if the credit's improved, if their finances are not in a good position, they can't save up a down payment, they can't save closing costs, then they're still not, even if we fix their credit, they're still not buying a house.
Yeah.
So it's always important to know, okay, what does your budget look like? How much do you make? What can you save? What are you willing to save? Does that mean that you got to cut out some things? Does that mean, I actually had somebody that cut their cable bill one year because they said, hey, it's only $80 a month, but if for the next 6, 7, 8 months, that's about $500. That's something that I can use towards helping me buy my home.
Do you help with budgets?
I will, absolutely. If somebody tells me, as I go through kind of a qualification process and I ask, what does their budget look like? How much have they saved? After they pay their bills, what can they save after that? And if they tell me I don't know, or if they tell me I think I can, but I can't give you a specific answer, if they tell me it's paycheck to paycheck. So now we got to find out, well, are there some places that we can eliminate some fees? Like, hey, Disney Plus may go away. Bro. ESPN may go away. Some certain specific things that we will cut out. You're not going out to eat 3 nights a week. You're packing your lunch. You're not stopping at Taco Bell for lunch every day. Just different things there that can help you save up funds and put you in a better financial position.
So I help clients with their budgets as well. Yeah. So my brother, he was a financial advisor, and finances have just always been instilled in me since I've been a child. And so that's something I help with too. And I think when we think about budgets, people don't think about it's the little things. They're like, well, I don't spend a lot of money, but then they have this habit of stopping at Dutch Bros or whatever every day,
right.
and that $7 coffee adds up. And so it's when we add up those little habits that they do every day, it's a small amount, but then when you add it up and you look at how much you spend a week, a month, a year on it, it's very eye-opening. Or if you have a smoking habit or vaping or whatever you do, there are things that you can cut. I know he said like cable. I personally don't have cable, but people have all these streaming services, and it's like, how many do you actually watch?
Right.
So I think that's really important, is to really take a look at your budget and see where you can cut. And usually there's somewhere where you can cut, right?
Sure.
So,
I will give you a personal example, just me, myself. So I used to have a horrible habit that I have a massive sweet tooth. Yeah, I love sugar. I'm now type 1 diabetic, so it's not as much as it used to be. But I would stop in the morning and I would get a Red Bull and probably a donut.
Oh my gosh. At
lunch, I would run to Arby's, Wendy's, whatever, because so in the morning, I'm spending about $8 to $10. At lunch, it's $10. On the way home, I'd buy a pack of gummy bears and maybe another Red Bull. So it's another $7 to $8. So on a daily basis, I was easily spending $25 to $30. So at the end of the week, that's $125 to $150.
Yeah.
And that's on a weekly basis. You multiply that times 52 weeks out of the year, that's $5,000.
Yeah.
So I had $5,000 that I was spending on just trash, garbage stuff. So one of the things I then decided is like, okay, I will give myself a budget of $20 a week. So I pack my lunch, I drink water, I do other things, like I've got stuff at home that if I want to work on a little pick me up, some hydration, D-ribose, things like that, to help give me a kick if that's my thing. But I've got $20, so I can still go do some things here and there.
Right.
But not $150.
Right.
So I've had to go through that process. And obviously for like you, your goal is to put somebody in a home.
Yeah.
Well, that means a lot of different things.
Yeah.
It's not just, hey, show me a house, let's do it, let's sign an application, and let's get it done.
No.
You have so many other things that come into play when it comes to financing, when it comes to credit, when it comes to insurance, different things that they can actually show, income, actually payments. So like they have to be in the same industry for like 2 years. They can't just say, well, I don't like my job, so I'm going to quit.
Right.
Well, then you're not buying a house.
Right.
So you have to protect your clients, and that's a wide range of things, and finance is definitely one of them.
100%. So one question I get a lot is what credit score do you need to purchase a home? So I do have lenders that can quote, can give you a loan with a 520 credit score, 580. But again, you're not going to get good terms with that. You're not going to get a good interest rate with that. So it's really important to boost your credit score. A 680 is good. And anything above 680 is better. So obviously anything above 680 is what you want to strive for. Do I have lenders that can quote lower? Absolutely. And sometimes you just need to get into a house with your current situation, and then you'll work on your credit later. But working on your credit is so important. So, okay, we're about to wrap up, but what I do want to say, Will talked about a lot of good information, and it probably is a lot for you to process, and maybe some of it over your head, and that's okay. That's okay. Yeah, that's okay. That's why we're here. So, give him a call, give me a call, and just kind of ask these questions. It's okay to not. Maybe you don't know the questions to ask. It's like, you talked about this. I don't really know how to ask the question. That's okay. We're here to help you. So just follow us on social media, give us a call, or send us an email. Whatever your method is, we're good with that. But we're here to help you is the bottom line. And that's the point of this.
Absolutely. Yeah. There's so much information. I mean, we now live in an age where information is easier to obtain, but yet unfortunately we become less educated in that we have a hard time finding the right information. Yeah. You can go on social media, you can go and Google about specific things about credit, and a lot of that is bad information. Same thing as far as, anything in life, whether it be health, fitness, finance, relationship. There's a lot of advice out there. Doesn't mean it's good advice. And so when we talk about these things like that, bottom line is that we would love to help you if we can. And if we can't, we still want to make sure that you're successful with what you're trying to do. And if it's not through us, then hopefully it's through something else.
Exactly. Point you in the right direction. I can't help every client or customer that comes to me, but I can at least point them in the right direction because I don't want them being taken advantage of. There's so many scams out there. So I try to help them. If I can't personally help them, I try to set them up with someone who can, because I don't want them to get scammed. At the end of the day, it's just I want to take care of them.
Yep.
So
absolutely.
But yeah, well, thanks, Will. This was great. I had so much fun.
Yeah, that's awesome.
This was good information. So just make sure to follow us and reach out to us with any questions.